speak more on the day's movements, we've got Grant Nader from Benguela Global Fund Managers joining us this afternoon. Grant, as always, thank you very much for your time. Let's start with the All Share today. I mean, it's been quite a choppy trading week with a lot of developments happening globally, fears around China, as well as global growth in general. What did you make of today's market close, and what do you say some of the biggest drivers on the bourse today were?
Yeah, unfortunately, it has been a bit of a volatile week, and unfortunately, another down day, quite a strong down day, in fact, and closing toward the lows, down over 1.5% on the market. I think what we're seeing is quite a significant fallout from the escalating fears around China's slowdown. And of course, South Africa at the moment, given all of our local challenges around load shedding and the economy and the like, we are very dependent on what's happening in the rest of the world to support our growth and our outlook. And so as commodities led the way on the downside, we saw the resources down a lot. We saw Naspers and Prosus down a lot, dragging the technology index down and the overall index down. And so there wasn't a lot of green on the market. All sectors were in the red. We did see a couple of the defensives like Shoprite and Bidcorp in the green, but they were few and far between. So a pretty difficult day. Yesterday was a lot of the South African Inc. companies, if you want to call it that, and today we saw a bit more of a bias toward the resources and the China-facing companies on the market coming under pressure.
Let's speak a little bit now, before we actually get to the company updates, those fears that you've just indicated are really going to put a lot of pressure on South Africa's economy, because what we've seen is the higher oil price and the rand remaining rather weak and volatile against major global currencies. Net fuel importers like ourselves aren't going to see any reprieve, particularly in sectors that are fuel heavy when it comes to consumption, that being agriculture, manufacturing and the like.
Yes, absolutely. So in the last week alone, oil's strengthened by about 4%, and over the past month, closer to 10%. And if you add to that the rand that's weakened about 3% over the past month or so, it's a dangerous cocktail of problems for South Africa. You know, we are dependent on importing fuel. It's going to push up our inflation. It's going to weaken our terms of trade, and it's going to put further pressure on the outlook in terms of rate cutting from the Reserve Bank, because as that inflationary pressure builds, it's going to weaken their hand, and that's going to in turn put pressure on the South African economy, around the consumer, around the retailers, and around, it sort of has a knock-on and feed-through into the entire economy, from a producer price input level to the consumption level. So it is a concern, and we are seeing that being reflected in the market prices in the last week.
And let's get on to some company updates. We had Sunland producing a really solid set of numbers today, Grant, saying that they've recovered from the huge disasters which included COVID-19, the KZN flood disasters, and many other issues that the insurance industry in general has had to deal with. What did you make of those results when you combed through them?
I thought it was actually a very strong set of numbers. We've seen a trend of the best of breed companies actually have been delivering solid results. And Sunland is another one, certainly one of the better operators in the insurance sector. Total new business volumes up 19%. The core business, the net result from financial services, up 26%. They actually saw better persistence. Well, persistence was weak, but they saw better risk experience. So margins were improved. Investment returns improved, although that is not a sustainable improvement, but that is positive. Everywhere you look, Africa grew volumes 54%. So I was very encouraged by what I saw. There was one marginal negative, and that was the outflow of assets under management. I'm pretty sure they'll get that under control. Potentially something around the Absa acquisition. We'll have to take a deeper look at that. But I would say overall, a very good number. Africa doing well, South Africa doing well, and India doing well. So tough environment, but good recovery from what was a tough couple of years for the insurer.
And then Delta Property Fund, Grant, releasing their operational update. I mean, these companies in the retail or property space, rather, if you will, have struggled quite a bit over the last few years as well. The environment has been challenging. But I'm wondering, with the update that they provided, do you see any green shoots?
Well, I think the update tells you that management's planning to do the right thing. They're into a kind of a restructuring. They're trying to reduce the debt. They're selling off vacant land and vacant property that has been a big drag on the portfolio. They're trying to improve the leasing and the renewals, but a lot of that is yet to be done. They've refinanced some of their debt at lower rates, so that's a positive. They've started to sell off some of these properties, that's a positive, but they've still got a pipeline of about 2 billion that they're trying to sell in various stages of progress. If they achieve that, and they achieve their target of getting their loan to value between 40 and 50, that is net very positive considering where they've come from. But it's still a tough sector. B grade offices, even the A grade offices, if we look at Growth Point, are still quite high in terms of vacancy, much worse than the rest of the property sector. So they are playing in possibly the toughest space in the toughest space. So green shoots are very small and are still a long way off before there's full confidence in the turnaround strategy.
I suppose we'll have to see how that strategy goes over the next few months. Grant, thank you very much for your time this evening. That is Grant Nader from Benguela Global Fund Managers.